Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Monday, August the 6th, 2018. Let's make this quick. The above chart here is of the E-mini S&P 500 futures. You can see how the market is clearly broken out. The one last thing we got to deal with is the longer term trend line support, which is this orange line. Okay, this one needs to get up and out of the Kumo cloud, but so far, so good. All intents and purposes, the market is in a bull market, and we seem to be getting now separation among the trend lines. The blue momentum line, daily momentum line, is turning upward along with price, so this should be able to sustain the rally in the S&P 500. The thing to watch for is the intraday price inflection points, as indicated in the weekly post-wave price triggers that have now gone out. So if you may want to check your email, check your junk, trash, and spam folders in case you may have missed it. And of course, you can also always log in to the trading room file folders and get all that good stuff. And you can peep it there. All right, so we had a nice little profit on the long side today in the E-mini S&P 500, and we're looking to continue that tomorrow. So we shall see. I want to know if the market is going to get up to the prior high here, the 28.70, 850, if we're gunning for that and if we're going to take it out. I have a suspicion that I think we're going to take it out on a spike high, but not close there. And then that's probably where the market will fall down at that point. We'll see if I'm right or not, but I am starting to see signs of that within the algos. You'll notice that too in tomorrow's post-wave price triggers. You'll notice that the momentum readings, you'll see that there have been some momentum shifts that are coming up. And I think we have a possible bullish momentum price inflection coming to us in the Russell. So the Russell may be leading the way here on that. So I want to point that out as well. So see your price triggers for further details on that and how we intend on dealing with that in tomorrow's trading plan. All right, so moving on to look at the Dow, which has been the weakest of these markets. So let's take a look here. Open this up on the weekly chart. You can see it's finally come out, but just barely. It's not really moving. You're not really getting separation of the trend lines per se. It's looking, mute. It's struggling. And this trend line is, deeper in the Kumo cloud. So it needs to really come out. It's not as close as the S&P is. So it's almost like the S&P is leading the Dow at this point, only because of those shifts that they made within the index itself, with the Dow kicking out a major long time stock, and you know how that shift goes. So here we be, and I can't even for the life of me remember what stock it was, but you can Google it and find out. So anyway, the Dow's been acting all weird and struggling. Look how long it took just for it to break out. I don't even know if it has enough strength to come up here and retest the old highs of 26,684. Okay, we're like 1,200 points away from that. Can the market do it? Will it do it? I don't know. The Dow is just, it's all messed up. After they shifted and changed things without warning, it messes things up. They don't know how to leave well enough alone. All right, here's the NASDAQ 100. Okay, the NASDAQ 100 is stronger, than the rest because its trend lines and price are outside the Kumo cloud and trending upward. All right, and it's in a good position right now to take out the old high of 75.30. So the NASDAQ looks like it's going to best that. And this old high is acting like a pointer, so that is going to be a magnetic attraction, and it should help the algos to push price beyond there. We may even see a possible 8,000 on the NASDAQ before year end. You never know, folks. You just never know. Okay, let's take a look at the Russell. All right, so here we are with this Russell. Russell needs to take out 1720.8, and right now it's in a position to at least try. It regained its momentum. It's really trying to play ball here and do a little something, something. Okay, this is where we are. So he hit a contract high here, a new contract high, and now it's getting on point to try to take that out. So this one, we have to really watch it and see if we can get enough underneath of this, underneath the market. It should help to catapult that price. But if the bears start to get a little restless, they could come in here and beat this down a little bit and just keep it stuck within the range. Because technically we haven't gotten out of the range. We're still trading within the July 2nd trading range and have not broken out of it. All right. Has not broken out of that. Okay. All right. There's where we are. So we shall see what happens with the Russell. Now let's look at this Bitcoin. Bitcoin, as you can see, is still super bearish. All right. Gapping down on Sunday night. And here we are, folks. Trading below the momentum line and resuming the bear market. At some point, we're going to need to deal with this gap and fill it. Got to back and fill and then resume the downtrend, or maybe once we find some kind of support, it'll come back up and test that. Who knows? But right now, this market's still in a bear market. There's nothing bullish on the chart. Here's gold. Gold is looking bearish like that Bitcoin, and it's still in free fall. We have not found support yet in gold. Gold is still selling off. Let's take a look at silver. All right, as you can see here, silver is also selling off and gaining downside momentum. Here's that crude oil. Crude oil is still in a bullish stance, even though it's, in a correction mode per se. It needs to avoid closing below $67.99, which is the trend line support here. It needs to hold that line if we're going to continue to march up and catch this rampage that's coming up here sometime in October. Okay, right around the corner, right after the summer. All right, so we'll see. And let's take a look at the dollar right quick. All right, the dollar is trying to break out of that Kumo cloud that's acting like some kind of suction vacuum to keep it from doing it. But this is where we are. Can the dollar gain legs? Looks like that dollar wants to break 96 and possibly even into 98. So this one's going to be a watch and see. But, trend lines and everything are still in the Kumo cloud. So this is a rough one. It has a big fight on its hands. And it's overbought right now, too. Let's take a look at the bond outlook. All right, so the bonds are in a bear market looking a little bit like Bitcoin. But this one is still in that corrective mode, bouncing off the lows. Overhead resistance is proven to be pretty solid at that 144 level. So we'll see what this one can do. Are the bears going to come in and take back control of this market and we're going to see yields rise? Or are the bulls going to go ahead and just start to stampede and take this back to the 145? We shall see. Bonds are at a crossroads. All right, so that's pretty much it, folks. Do yourself a favor, come on down to postwavetrading.com. Learn how to trade these markets in all types of situations. Get the daily rally and crash alerts delivered to your inbox along with other market commentary and live training with yours truly. That's right. I give live training and tutoring, one-on-one, you name it. You're going to have access to a whole bunch of goodies and a lot of goodies in store that are coming to you as well. So with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Be encouraged. Peace.